Hi everyone, today let's talk about the Bank of Japan, then we'll take a look at forward earnings, then we'll get into the economic calendar, as well as max pain for tomorrow's expiration. Then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Looking at the Bank of Japan, they are starting to talk about allowing their rates to go over 0.5%. The rates have been locked into plus or minus 0.5% for quite a long time. They've been doing QE, and they are one of the last banks to potentially raise their rates. And now that they're starting to talk about doing this is going to be one of the last bastions for pretty cheap cash on the global market. The European Central Bank and the US Bank have obviously raised rates quite a lot, meaning that cash is expensive there, but the Japanese central bank has not done that quite yet. And now they are saying they are going to be more flexible in potentially allowing rates to go above that 0.5% threshold, but might still clamp down on any sudden spikes. So they've been keeping their rates low by buying bonds with their central bank. And now it seems like they're going to pull back on that purchasing and pull back on QE, which could obviously have a huge impact on the global economy. Moving over to forward earnings, they did very well and raised their guidance. Forecast between 11 and 12 billion, up from the prior 9 to 11 billion. Still down a little bit, but definitely looking more positive for the automaker. They also adjusted their free cash flow up by about $500 million. The previous guidance was $6 billion, and now they're in a range from $6.5 to $7 billion. They're still losing a lot of money on electric vehicles. You can see $1.08 billion from April to June on the Model E. Electric vehicle, definitely interesting to see that. They're still chasing Tesla in terms of profit margins on electric vehicles. 72 cents versus 55 expected. Revenue 42.42 versus 40.38. So they beat on the top and bottom line. And everything still looks pretty good here for the automaker. Moving over to the economic calendar, you can see European Bank raised rates, and they were fairly positive. We saw a huge spike at the beginning of the markets. Core durable goods, also very good. Durable goods orders, very good. GDP also beat expectations. All the economic data was quite good. Pending home sales, 0.3% versus minus 0.5% expected. So economic factors still doing quite well. Looking at tomorrow, we have core and headline PCE in the morning at 8:30. We'll see how that one plays out. And then in the afternoon, we have Michigan consumer sentiment as well as inflation expectations. Moving over to earnings, MasterCard beat on the top and bottom line. Nestle beat on the top line. AbbVie beat on both. McDonald's beat on both. Comcast also beating on both. T-Mobile missed a little bit on the top line. Intel putting out good guidance, expected to lose 4 cents per share. They ended up making 13 cents per share. Beat on revenue. Everything looking pretty good over at Intel. Honeywell also beating on earnings. And then American Tower, another good performance from them. Moving over to max pain for tomorrow's expiration, sitting at 449. Stock price sitting at 452, down a little bit. Got that call wall at 451, also at 460, more in line with these put walls. So looking for a finish somewhere in that same range. 452 up to maybe 458. That would be a huge push. I don't think we're going to get a rally like that, especially after the price action that we saw today. But you definitely have a put wall at 450, so I don't think we're going to go too much lower, somewhere in the same range where we've been, maybe a few dollars in either direction for tomorrow's close. Moving over to the charts, what a bananas day. So we ended up gapping up massively, hitting the trend line, broke down dramatically as well, coming back into these lows from the 20th and 21st. Also hit the 200 SMA on the 1 hour chart. We're below 453, so definitely looking weaker here. And look at that red bar on the daily chart. Massive, massive red bar. You have to respect it. And I would expect more selling to come through. Bearish momentum on the daily chart. RSI looking weak. Big volume on that bearish candle. Definitely not what you would want to see. Ended up being down about 0.2% on the day. Moving over to the NASDAQ, similar thesis. Gap up, big wicks. Strong rejection in the afternoon. You can see we broke this level here. I had a midpoint that I was watching right around that 379 area. And then we broke all the way down to 376.45, back into these previous lows. We're below all of the EMAs and SMAs on the hourly chart. ended up being down about 0.25% on the NASDAQ. Not looking as bearish as the SPY, but momentum still bearish, volume picking up to the downside. Definitely looking more weak today than we did yesterday. I expected this bigger push, and I started to set up for a kind of continuation rally after we broke this level, but then we absolutely collapsed in the afternoon, and now this looks much weaker to me going forward. Moving over to the Russell and the Dow, the Russell wicked my upper level and then broke down dramatically, breaking 195.15. I rolled down my calls to protect myself. We still have the 55 EMA here on the 4-hour chart holding up. We can still see a little bit of a rally into the zone. Wait till that 55 consolidates into this area, and then we see the bigger breakdown down to that 189 area. Certainly possible. Momentum bearish, RSI bearish, volume picking up on that down move. Everything that you would not want to see if you were bullish going forward. And if this 55 EMA breaks, that's going to be a good indicator. We're going to see 191.89 or even trend support down in that 190.50 area. Dow also wicking resistance at 356.89. We talked about this looking weaker after hours yesterday. Sure enough, we gapped up from the trend, hit that next level, and broke down super dramatically. That one candle was about 0.75% down, bearish momentum, bearish RSI, bearish volume, everything looking weaker and below all the shorter term EMAs and SMAs. Moving over to the equal weighted S&Ps, you can see that gap up, hit my level on the money, 155.79, and then we broke down dramatically from that level, getting all the way below the 9 EMA here on the daily chart at 153.95, engulfing all of these previous candles down to the lows from 20 July. Equal weighted S&Ps looking much weaker. We've been watching this as a rising wedge, and if it falls out of this wedge over the next day or two, this could be much more dramatic, and a push down to 145 is not out of the question. Moving over to the S&Ps divided by the M2 money supply, you can see on that wick here today, we hit my level, 2205, hitting those same highs going back to January of 22, as well as the all-time highs here in November of 21. So we hit that level, and now we're starting to pull back much more dramatically. You can see that here on the day, big move down. And like I said, this could be a significant change of trend, bearish momentum, RSI breaking down strongly from that level. Moving over to Apple and Tesla, similar thesis, gapped up through a wick, broke down, we're back below 193.96. If this 55 EMA breaks down at 192.19, that's going to be very weak. Bearish momentum, bearish RSI, Apple looking weak. Once again, definitely looks like a double top now. Didn't quite do what I thought it was going to do. It did gap up and then broke down. I thought the 21 EMA would hold, but then we got below it and then we broke down pretty dramatically to these previous lows. If this low breaks, which I do expect that it will, the price target would be that 262.89 at the 200 SMA on the 4-hour chart. Moving over to staples and discretionary. Staples selling off a little bit. Big wick, big breakdown like everything else, but not as dramatic as we saw here on discretionary. Gap up, took out all these previous lows, broke my level. Now we're looking at 167.29, bearish momentum, bearish RSI, bearish volume. So everything's starting to sell off a little bit, but discretionary is selling off a little bit faster than staples. Moving over to breadth, we got the final move here in my opinion. You can see that big red bar broke down from this rising wedge that we saw on both. Looks super bearish on both charts. Bearish momentum on both as well. And in my opinion, this is going to be the first move in a bigger move on both of these charts, indicating that this is a potential reverse of trend, and you do have to treat it like that based on these charts. Moving over to the dollar, we talked about that 55 EMA on the 4-hour chart being the spot to watch. Sure enough, we hit that level. It ended up holding here on the 4-hour chart, and we got a huge bullish candle. And now we see that the dollar has found some strength off of the 9-day moving average as well. Bullish momentum, bullish RSI. And this might be pushing back into this 102 to 103 zone. And if the dollar is truly finding some strength, we should expect equities are going to be falling as a result. Moving over to J&K, we broke down from this consolidation. We gapped up into it. We're falling out of it now. If we gap down tomorrow, that could be super bearish. Huge volume on the day. Not quite bearish momentum yet, but I would expect to get that tomorrow. We're still in an area where you could find some support, but based on everything I'm seeing here, this looks weak. Similarly on TLT, we got a gap down, huge break of that 100 level back into these previous lows, and I would expect that to get taken out here as well, which would be a takeout of this island reversal from March, which could be a very dramatic move down into these previous lows, down to like 96.50 or even all the way down into 93. That would be interesting. Overall, this looks weak here on bonds. Moving over to the volatility indices, MOVE Index did rally, but not super convincing here. VIX, on the other hand, engulfed the previous candle on the daily chart, crossed above 1490 just for a moment, wicked that 55 EMA at 1504. Bullish momentum, bullish RSI, definitely showing some signs of life here after that bigger move down yesterday. Definitely something to pay attention to going forward. Moving over to my accounts, you can see obviously I did not do great. The Russell was down a little bit more than 1%, so I took some losses there. I did roll out and down those covered calls to get a little bit more credit to help protect myself. Otherwise, looking at the Qs, I have some puts on, which I probably shouldn't, down at 377 and 379 for tomorrow's session. We'll see how that plays out. I might roll this 379 another day and down as well to protect myself some more. But you can see I do have a 378 call, 379 call, 383 call. Very little credit left on that. Probably should have rolled it down as well. And then I have a 381 call for Monday. And you can see that was the big thing that really helped me out today. Still lost money, but definitely not as much as I could have. And there's still about $1 credit left on that one as well. So we'll see how it plays out. Obviously, everything is looking more bearish today after the huge red bar and the drop in breadth, which you do have to respect. I'm going to continue to trade the way that I have been based on my levels. We're still holding that one level on the NASDAQ. And if that level drops out, I'm going to take off all of my bullish positions and continue to trade to the bearish side. Let me know down in the comment section what you think of the Bank of Japan starting to shift their policy and how that's going to affect the global economy. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.